Hello, this is Compound Interest Stock Guy, and today we're going to talk about gold. I want to emphasize that I'm not a financial advisor, and anything that I explain is just for information and entertainment purposes. Do not buy a stock or buy anything because I talk about it in these videos. Buy it because you like the stock or you like the commodity and you did your research. Okay, so here we're going to get into investing.com. It is one of my favorite websites, and you can look up pretty much anything, alright? So, as you see, we're looking at gold. Now, gold went up from 2001 to 2011, okay? So in 10 years, it went up to $1,700 from $257. So that was about 6 times as high, 7 times as high in about 10 years. But for the last 5 years, 6 years, it's just been stuck around $1,100, $1,200, $1,300, right? People haven't really been paying too much attention to gold. Okay, so what do the majority of investors on investing.com say about gold? Apparently the sentiment is bullish. 68% of people think that it's bullish and 32% think it's bearish. So that is interesting. That means that the majority of the people on this website think it's bullish. So let's look into closer timelines into the chart. So it's just been constantly creeping up higher. So there, 6 months ago, it was around 1272. So now it's creeping up to 1272 for today. Yeah, so back at the beginning of the year, it went as high as 1365. So that is the resistance parts for gold. So how can you buy gold? You can buy gold in an ETF, or you can buy the physical gold at a bullion shop, or you can buy jewelry. Jewelry I don't recommend buying because you're paying extra for the fact it's made into jewelry. But if you do like the type of jewelry, whether it's a chain or a bracelet, and it's in gold, I mean, if gold keeps going higher and say in 5 or 10 years, then you're gonna make decent money on your jewelry, and you can wear it for fashion as well. So in that sense, it could be profitable. Another thing is you'd want to get 18 karat gold or 22 karat gold if you're buying it for jewelry and / investment, because 14 karat gold that you buy at People's or other jewelry stores, they charge a lot. Like, there's a lot of margin in between the gold. Like, what, it's 10 karat gold, and you pay a lot more than what it is to buy 24 karat real gold. Like, if you buy 0.999 gold gram in a bullion shop. So you can also buy gold mining stocks. I would stick to the biggest and the baddest gold mining stocks, say ones such as Barrick Gold. I don't know. I'll look into them further about which kind of mining stocks. For now, I'm just kind of looking at the price of the gold and how it is gonna go up. It looks to be. I mean, that is the consensus. Even Jim Craner says he's bullish on gold. He says he's spot on about buying. A technician says, and it could add another 10%. So it's trading at 1265. So if it went up 10%, then that would add another $125. So it would get close to about $1,400. So it says the traditional safe haven asset has rallied more than 3% this month as investors sought shelter from a volatile stock market. The surge has even prompted praise from Mad Money's Jim Craner for gold's bull market. Market uncertainties such as trade tensions and other geopolitical worries tend to increase demand for safe haven assets. As trade war tensions have peaked over the last 3 months, gold prices have risen 6%. Okay, so when there was the Brexit fears back in 2016, I'll show you how high it went. It went to this high. It went to $1,374. It almost went to $1,400, right? And earlier in 2016, it was around 1063, and then at the end of the year, it went to 1374. So it rose pretty fast. I mean, it rose to 30% over the year. I mean, gold doesn't move that much. It's a pretty stable commodity. When you're buying it, it doesn't move as fast as crude moves, but you can still make money off the upswings, the commodity. So what else does he say? He says it could just be getting started. Chief Craig Johnson, Chief Market Technician at Piper Jaffray. It looks like we're putting in a bottom here, and it looks like we're going to see this maybe 9 to 10% higher to get back to the old highs. And on the gold index, a 10% rally would take the exchange traded fund ETF to new 52-week highs. It would also mark its highest level since August 2016. Yeah, and that was when the Brexit was happening, okay? I think we could see some weakness in the dollar in here, given that the Federal Reserve might be less hawkish going forward, and that might be really the underlying driver higher as to why we'll see the gold prices go higher, said Johnson. The US dollar and gold prices typically have an inverse relation, in which one falls and the other rises. Bullion tends to get a bid when the greenback falls, as it becomes a cheaper commodity to investors trading in other currencies. So you see, if USA, their currency, was to get weaker, then the gold is to go higher, and if USA's currency goes stronger, then the gold goes down. So if you're in a country where you believe the currency is gonna get weaker and weaker, instead of having your money in that currency, it's better to have it in the gold, because that way, if it's a significant amount that you think that is gonna be inflation in that country, then it's better to buy gold, and then you can buy it for more money later when you want to cash it in. It says, I don't see it ending just yet, perhaps not before the end of the year, but certainly as we get into 2019, Gibbs said on Trading Nation. A lot of the concerns that we have, tariffs, Brexit, and so on, as those dissipate and we really start looking at the fundamentals again, this could very swiftly be undone. So, sounding though, doesn't want to fully commit to a bull run, it sounds as. So, what are the relationship between gold goes up when interest rates rise? So, rising and higher interest rates may in fact be bullish for gold prices, simply because they are typically bearish for stocks. So if people do not believe in the stock market, then they can put buying pressure on the gold, and then the gold prices will increase. Gold prices increased by more than 150% during 1973 and 74 when interest rates were rising, and the S&P 500 index dropped by more than 40%. Wow. So it dropped by 40%. Crazy. Let's look up the biggest gold stocks. So large cap, Barrick Gold, Goldcorp, Kinross Gold, Osisko Mining, Redback Mining, So I think it's safe to say Bear Gold could be the biggest one in Gold Corp. So it's gonna say 2013 market cap 23 billion. Bear Gold, Gold Corp, Bear Gold, Newmont Mining, Peleus Gold, and Newcrest Yamana, and Kinross Gold. Yeah, so I've owned Yamana before. What is the ticker? Yamana. I owned it in when Brexit was happening, and I made a bit of money on it. I was a very small trader back then. I would invest around like $1,000 on a single trade. Okay, so this one offers a 0.82% dividend. But you look back in 2016, it went to 770. So if the market, the gold starts going up above those levels in 2013, you could see this go up to like $5 or $6 or $7. I mean, this might be a good stock to buy calls in. And again, I'm not a financial advisor and do not buy because I talk about these stocks. Just that would be crazy talk, right? I'm just talking about these stocks because I'm interested and I want to share my knowledge and grow my channel. Bear Gold. So it's been going up higher since September. This one offers a 2% dividend, and the ticker is ABX. It's a bigger play. It's 20.84 billion. $13.10, and then now it's at 17. So $27, $29 it went in. How high has it gone? It's gone as high as $49. Gold Corp. G, that's a good ticker. So it's close to 52-week lows. 52-week lows were around 1109. So it's been as high as almost 2.5 times back in March 14th, 2014. It's been as high as $55. So it's got a PE ratio of 107. So the way these companies work is they're based out of how many ounces they get every year underneath the ground, and whether it costs them, say, $500 or $1,000 US dollars to get 1 ounce of gold, that will change their profit margin. So let's look at it. So if gold was to go up to, say, I don't know, like 2,000 US dollars, instead of them making, say, only maybe it costs them $1,100 to get it out of the ground, and they're getting $12.65, so they're only getting about 10 to 15% profit per ounce they're getting out of the ground. Well, now if the price of gold goes up to $1,500, then every dollar goes up, they're getting bigger profit margins. So then as soon as it goes to like $17, they're $1,700, then they're making even more money. So every time the dollar goes up on a gold mining company, then it makes it way more bullish in that company. Because see the way like this PE ratio, it can just get sliced in half really quick if gold was to go up to $2,000 within a year or two. So right now, the way they produce how much gold, they could produce a lot of profit if the price went up to say $1,500 to $2,000. So they'd be a lot more profitable. Let's look at what is Barrick Gold's PE ratio. Doesn't say the PE ratio. I'll look into TMX. It doesn't say, it's not applicable. Well, that doesn't tell me anything. Let's look into gold. It's almost Christmas time, hey? Almost Christmas time. It's coming. Gold bars. So people can buy this, right? So this is in Canadian dollars. So if they pay with Bitcoin or check, they get a better deal. It's interesting. So yeah, when the price of gold's gonna go up, these are gonna cost a lot more money too. So anyways, that's what I have for today. I hope you enjoyed the video, and thanks for watching. This is Compound Interest Stock Guy, and please give me a like and subscribe for future entertainment and information on the stock market, commodities, financial information, and good night.